episode of Market Academy. Now, as you know, a few weeks back we started kind of a review, a basic review of the wave principle, and we started off by looking at the impulse wave, which is this wave pattern that you see here, upper left-hand corner. This is one of two types of motive wave structures. And then last week, if you recall, we kind of reviewed the ending diagonal, and also too, whenever we're going through this basic review of the wave principle, understand that we're also looking at some of the complexities and the variations of each one of these individual patterns. Also too, again, I highly recommend that if you do not already have a copy of Elliott Wave Principle written by A.J. Frost and Robert Prechter, it is a must-have. If you want to learn the wave principle, learn it correctly, then that really is the only book I recommend. Okay, now this week we're going to continue our discussion by beginning to look at corrective wave patterns. Now, as you know, there are only three foundational corrective wave structures, and that is the zigzag. Next week we'll look at the flat, and then the following week we will look and examine the contracting triangle. So let's go ahead and dive into the zigzag, and it's probably, I would say, the most common type of corrective structure you're going to encounter. And also, too, remember the notation that we use whenever we were looking at the motive wave, the impulse wave. The substructure of that impulse wave is 5, 3, 5, 3, 5. If we go to the ending diagonal, remember it's a 5-wave move, but each wave of an ending diagonal subdivides into 3 waves. So that would be 3, 3, 3, 3, 3. Well, the zigzag, there's only 3 waves, but the first wave, wave A, subdivides into 5 waves. So we use a 5, 3, 5 notation to simply identify that wave A subdivides into 5 waves, wave B subdivides into 3 waves, and wave C unfolds in 5 waves. Just a very simple formation. 3-wave move, and as you well know, if you're familiar with the Kennedy channeling technique, that move is going to be contained within parallel lines, and I'll show you some examples of that today as well as tomorrow, and also too on Thursday. So now let's kind of dive into some of the Fibonacci relationships we tend to encounter within a zigzag. So once your initial setup wave, wave A, is complete, what we now need to do is look at wave B. So what are some of the relationships we tend to see in wave B versus wave A? Well, the most common Fibonacci retracement for wave B of wave A is 0.382, and then that's followed by 618, and then that's followed by 50%. So whenever you have 5 waves down and 3 waves up, and you think it is indeed a zigzag, then again, this is what you're going to be initially looking for. A 382 retracement followed by a 618 retracement followed by a 50% retracement. And then, of course, once wave B is complete, then we look for wave C, trend move. Of course, we're going to be looking for that to evolve also as a counter trend structure. We're going to be looking for this move here to be a zigzag or a flat or possibly even a triangle. And then once wave B is complete, then we look for wave C. And these are the relationships we tend to see most often as far as wave C versus wave A. Of course, equality followed by 1.618. Then followed by 0.618. So these are the most common, say, Fibonacci relationships we tend to encounter within zigzags. And again, it's a very simple structure, 5, 3, 5, and of course, more often than not, tends to be contained by parallel lines. Now, this is where it can kind of get a little bit confusing because each core pattern, remember, it has some of its own unique, say, variations and complexities. We discussed this when we were discussing impulse waves. We went over this when we were looking at the ending diagonal. For example, a variation of the ending diagonal, the typical ending diagonal you would encounter would be the expanding ending diagonal. Again, one of those patterns that I classify as a unicorn. And then also, too, a variation or complexity of the ending diagonal is the leading diagonal. Okay? Well, as far as zigzags go, some of the complexities or variations that we tend to encounter would be the double zigzag. Now, the double zigzag falls into an arena of corrective structures that we tend to refer to as complex corrections, or what I like to refer to as extended corrections. Okay, well, there are 3 types of complex corrections. You either have a double zigzag, which is what we have here, a double 3. Now, all a double 3 is would be 2 flat corrections joined together by an X wave, or a combination. Now, with a combination, you either have a zigzag X-wave flat or flat X-wave zigzag. Okay. Now, again, these fall under the, say, the heading of complex corrective structures or extended corrections. Now, here is just a straight up simple double zigzag where we have, again, 535 for W, X wave, and then another ABC or another 535. Now, what can kind of get a little tricky sometimes, again, is just, again, the variations we tend to see within complex corrections or extended corrections. Now, one thing that I find most useful is whenever I'm working a double zigzag, one thing, a trait that I see quite frequently is that the X wave tends to end at or near that prior wave B extreme or the initial wave B extreme of the initial zigzag. I see this tendency quite a bit, so much so that I often look for it. Okay, now let's look at another variation. Remember here we have ABC with a W, but this corrective pattern, this X wave here, as you can see, because that secondary dip ends at or near the origin of the initial move up, that's a flat correction. So you have a zigzag ABC for W, and then that's followed by a flat in an X wave position, and then we see another 535 pattern, another zigzag. And if we can kind of continue on with the, where you're scratching your head, here's an example of a zigzag where you have a contracting triangle in the wave X position. Okay, again, this happens. How often does it happen? Well, I don't have any data on that, but it does occur, but I tend to think it's somewhat seldom. So this isn't one of those things that I would be initially looking for. I would be looking either for this kind of a variation where you have an X wave that, takes its own sweet time, or you have an X wave that kind of suckers you in because it's a very swift, sharp move back up to at or near the wave B extreme, and then you see the failure or the reversal in price. So this is what I tend to encounter most, followed probably by this interpretation here. Rarely, again, do I encounter triangles in the X wave position of a double zigzag. Nonetheless, they do indeed occur. Okay, now going on and kind of moving on a little bit more into something, a realm that I refer to as slope analysis. Very, very important, especially when we begin to look at the slope analysis of what we tend to anticipate in a flat correction versus a zigzag. Now, in a zigzag, what I tend to observe more often than not is that the decline, the volatility, whatever word or adjective you want to use, of wave C is always going to be less aggressive than what occurred in wave A. And again, always is probably a strong word, but this is a characteristic that occurs more frequently than not. So you have an initial 5-wave decline that seems to be somewhat volatile. Then you have your wave B counter trend move. And then your wave C does indeed, of course, always unfold in 5-wave structure. But remember, going back to last week's lesson, an ending diagonal can also occur in the wave C position of a zigzag. So this wave C is either going to be a zigzag, it's either going to be an impulsive structure, an impulsive decline, or it's going to unfold as an ending diagonal. But the slope of the wave C, the decline of wave C, again, more often than not, tends to be less aggressive than what was witnessed in the wave A. And then, as always, because we are talking a zigzag correction, this is, again, kind of a key fundamental principle of the Kennedy channeling technique, where basically all that is, and again, it's a trend line algorithm I developed over 20 years ago. And all it really is, it's just it allows you to identify Elliott Wave structure more confidently, i.e. trending price moves versus counter trend price moves. Because what I've observed and what continues to be, say, reinforced every day I look at price charts is that counter trend price action tends to be contained by parallel lines. Impulsive price action, trending price action does not. So whenever you're drawing your corrective price channel for a zigzag, it's actually quite simple. You start at the origin of wave A, draw a trend line to the extreme of wave B, and then copy that line to the extreme of wave A. That defines your corrective price channel. Now the example over here to the left is what I refer to as a bottom line reversal. That's because that wave C terminates somewhere at or near that lower trend line of the corrective price channel. Now over here to the right, We have the A again. We start our trend line analysis, or going to the origin point of wave A to the extreme of wave B, take a parallel of that to the extreme of wave A, and oftentimes I like to have a midpoint of that price channel, and this is what I would call a center line reversal. And again, this has been my kind of bread and butter a lot of times, by just being able to say, okay, hey, this is a counter trend move as long as it's contained within parallel lines. And pretty much I know where to anticipate or expect that counter trend move to actually terminate. Well, that about does it for today's somewhat quick or very brief, although not that brief, explanation of the zigzag. And again, what we're going to be doing tomorrow, we're going to transition from these line diagrams, which admittedly are very easy to understand, and actually look at open, high, low, close price charts and apply what we've learned today. Okay, everyone. Well, that's about it for me for today. As always, thank you very, very much, and I will see you tomorrow.